What's up, you guys? Welcome back to Young Money Investments. In today's video, we are going to be talking about the reasons that you fail at swing trading. Now, I don't want to point you, yes, you watching this video specifically out, because we all have failed at one point or another. Today's video, I want to go over the main reasons why you fail at a swing trade. And I'm not just mentioning you, I'm talking about all of us in the swing trading community. Why do you fail when you enter a position? Today, we're going to talk about all those things and how to avoid those to make you a better trader and put more money in your pocket and not the next guy. All today on Young Money Investments. All right, you guys, so one of the things that I have seen a lot in the private mentorship group, which again, plug, ding, 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 right down there in the description, there is a link to that. We have been seeing and kind of talking a lot about is how to know when to enter a position. We've made some really good trades lately. Our accounts have been going up, up, up. We've had members in there that are making 16% in a month. And there's been a lot of good growth. And I think one of the biggest factors for our overall success as a group in the Young Money Investments private chat room is that people aren't getting into positions too early. You're waiting for the reversal. Now, what does that mean? Oftentimes, a lot of people want to catch the falling knife, and you go, what do you mean catch the falling knife? Well, let's take a look at the charts and I can explain to you what usually happens to most value investors or swing traders. All right, so looking at the charts here, oftentimes what happens when you are swing trading, we have two great examples. You have Overstock, which again ran from $15 a share all the way up to $29 a share and then had this massive sell-off. Again, we have another company right over here, Roku, which is another great example. Recently, not too terribly long ago, it ran all the way to $176.55. And then we saw this massive slide down. Now, especially talking about Roku, we can zoom in here and look at this time period. So you have 1 day it sold off, 2 days it sold off, 3 not really, 4 yes, 5 not really, or that's 6 not really, 7, 8 not really, and then you have 9, 10, 11 getting hammered, 12, 13, 14, 15, 16, 17, 18, and then you start to see the break. So what we see here on the chart pattern is we see this break of pattern, we see this trend down, and we see nearly anywhere between 15 to 20 days of this consistent downtrend pattern. And then what do we see? Taking a look at the charts, we see where it starts to trend up. 1 day, 2 days, 3 days, a little bit of consolidation, 4, 5, and 6, then 7, 8, 9. It starts to create this cut pattern, and we start to see this thing actually start to take off. If we zoom out a little bit more, we're talking about a massive, massive break here. We're talking about from lows of 99 all the way up here to 150 again. That's a 50% return. And what did you have to do in order to make profit on this trade? Simply put, what you had to do on this trade is you had to be patient. You had to not catch a falling knife. A lot of people are tempted once it falls 10%, 15%, 20%, to just buy, to just get into that stock. And really, that's not necessarily the one indicator that means it's a buy. You need to go through the consolidation phase in order to start making money. One of the biggest things people don't understand, especially when they get started in the stock market, is that there needs to be that consolidation. There needs to be the drop, the consolidation, and then the uptrend can start to happen. Just because a stock sells off a whole bunch, doesn't mean that it's a good buy. There's usually a reason or some sort of faux reason a lot of times, especially in the case of Roku, and Overstock sold off for another reason, which we can get to a little bit later. But these companies sold off for a reason. It's going to take a lot of good PR. It's going to take a lot of people changing their mentality, especially if other traders lost money, to get back in. There's going to be a little bit of a consolidation or a cooling off period in order for people to get back in that stock and start to want to make money again, honestly and truly. Next chart that we can take a look at, like I said, is Overstock, just to give you a good idea of consolidation times. Obviously here with Roku, it took about, like I said, 15 to 20 days. With Overstock, it's taken quite a bit more time. We're talking about 1 day of selling off, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27. We're talking almost 30 days, almost a month of downtrending and consolidation. Now, does that mean that this stock is obviously sometime very soon going to just start running up? No, there's never a set specific time. But the point that I want to make with this in comparison to Roku over here is that it took a while. The selling continued. You know, you could have thought after one day it sold off 12% or 15% that it was a good time to buy. But if you've not received the confirmation, that does not make it a good buying opportunity. You need to have support and resistance. Support and resistance is one of the most important things I would personally say you need to understand and master as a swing trader or as a trader in general. The other thing you need to master is also smashing that thumbs up button, because if you haven't mastered that, this channel's never going to grow. We're not going to get bigger. We're not going to be able to talk about more stocks, and it's just not going to work. But with that being said, I love all you guys that are here, subscribed, liking this video, and learning about the stock market. All right, you guys, rule number 2 for me, and this is a crucial one that has taken me a while to learn, that is sizing into your positions. Now, what does it mean to size into your position? Simply put, I never take a complete full-on position the very first time I enter a stock. I sometimes will buy a little early. I'm guilty of catching the falling knife every once in a while. But what I have learned is that you need to learn to average into your position and still have backup capital. I will never take, I shouldn't say never say never, right? But one of the things I do is I usually will add no more than half of my position when I start a position. Sometimes I'll take a quarter of my position. Sometimes it'll be an eighth of my position. It just depends on how confident I am in the charts. Usually if I'm not that confident and I'm only taking an eighth of a position, I probably shouldn't be getting in general. But usually, like I said, it's a good rule of thumb to add maybe a fourth of your position or a third of your position to start. And you can size in and add as the trend is showing an uptrend pattern. Again, if we were to take a look here at Roku, we can go over here at Roku and we can see that this $98, $99, $100 level of support was a previous pretty solid level of support right through here. Where did this trend come down to? It showed that this was a good sign that this was the bottom. This was going to be your, your level of support. And again, it had been previous support before it had made this massive run. Now, what would make you want to decide to get back into this? Well, taking a look here, you can see that this is wicked down here once. It's touched again, it touched again the following day, and we're starting to make lower lows. Yes, it's not perfect, right? But we're starting to see lower lows on the chart. And this is a good example again. You can see another level of support right through here that it's starting to create. And it's stair-stepping. This was another level of support and resistance. It was able to break through and continue to push up. So every single time that it starts to break through these levels of support, of resistance, and build new support, that's another tall tale indicator for you as an investor and swing trader that this is a good opportunity to actually buy in and take a position on this stock. One more thing to go along with that, you guys, is have the capital available. I think that's the biggest problem, is especially getting started with a smaller account, it's hard to reserve some capital for that trade to average in more. But that is really going to be the key, you guys. That is so important. You have to be able to add to your positions, because it might drop a little bit more. You might want to lower your cost basis just a teeny bit, get it closer to that level of support, and then if it cracks, you get out. And that happens. That's one of the great things with $0 commissions. You can do that. The next thing, you guys, is one of the most common things that I see, and that is lack of patience. Honestly and truly, lack of patience is what is going to kill you. I can't tell you how many times I've seen people have lack of patience in a trade. They get in too early, they go through the consolidation period, or it drops below what they were willing to get into it, and they end up bag holding. Now, what do I mean by this? Well, let's take Overstock, for example. Here we have Overstock here on the chart, and a lot of people, let's say you got in up here at this $15 range. You thought, okay, I'm gonna get in right here around $15. It looks like it's starting to uptrend, and boom, it takes a drop. It drops 30% from where we got in. And you go, oh crap, well, I'm too deep in this. I'm gonna continue to hold, right? So you end up holding it down here, and then it sells off more. And now you're down about 50%, 40% of your overall position, and then it starts to consolidate. Well, the biggest problem that happens for a lot of traders is they put most, if not all, their capital in that particular trade. They were enticed by the fact that they thought they could make a ton of money, and now that all their capital is stuck in it, they don't want to trade anymore. Their lack or even their ability to trade is kind of gone. They just are wanting to hold the bag. They don't want to take that big loss. And then honestly and truly what happens is usually the stock will start to go up. We'll see this uptrend pattern. We'll see this hold support here, and we'll start to see this trend up. Well, once it gets back up here into this $15 range, what happens is these traders want to take profits. They take profits right here. And then they don't realize that they're trading against the trend. They're trading against the fact that this chart pattern is showing an uptrend pattern. And now this stock runs from $15 to $20 to $22. And they go, I hate myself. And you don't want to hate yourself. You do not want to be mad at yourself because you got out too early. You went through all that struggle, all that time to hold this stock that was in the red, and then now it's actually positive and you sold out for break even. You guys, that is a psychology move that happens all the time in the stock market with retail traders. The biggest thing with this is you lose your time, and it is so sad to watch people do this because you had the right philosophy, you had the right idea, but because you were burned and stuck in this position so long, you burned so much of your time and you wasted all these other opportunities you possibly had to make some money in the stock market. The other thing you've wasted if you didn't like this video anymore is future videos to give you more cool content so you can learn more. And that's honestly it, you guys. I think there is a lot of lessons to be learned in these few things that I just gave here today. I want to talk a little bit about TVIX. That is one ticker that I'm definitely watching quite a bit right now. Markets are up pretty high. As you can see, the SPY is at all-time highs right now. I think with a lot of the political news coming out this week, we are going to see some sort of a pullback, some great little chance to take a little bit of profit off the table on shorting the S&P 500. The three shorts, and you're going to be watching this after market close, but the three shorts that I was super interested in today were XNet, PCG, and SES as well. So those are the three. Hopefully, if you want to go back and kind of look at these charts, I'm obviously filming this before the market and everything, but go back and look at these. Why was I interested in these? If you know why I was interested in these three short positions, and also just the S&P, well, I already told you why I was interested in the S&P 500 and TVIX, but if you understand why I was interested in these three tickers, leave a comment down below. I might even give you like a free couple weeks in my private mentorship as well. So I'd love to do that. Catch you guys in the next video. Thanks so much. Bye.